Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I'm Rajeshwari here. Let us discuss today preparation and presentation of financial statements as per the schedule 3. Now, why we need to prepare this financial statement? What is the purpose of preparation of this financial statements? Now, in business, is it compulsory or mandatory to know the financial position? If I want to invest on any company as an investor, how I am going to invest? What basis I am going to invest? If as a company, if I want to take decisions regarding to my expansion or decision related to the further investments, rising of funds, on what basis I will do this? So I want to know in which position I am. By understanding the present situation and by analyzing my past performance, I can think about my future. Right? Whenever you are taking any decision, you need to analyze your past, then you need to analyze your present. This will help you to take decision related to your future. Right? How I will understand or how I will know how my past performance was, whether it is better than the previous or we need to improve more, and how I need to go further. So what should be my next step? That is my future, right? So this I will understand by analyzing the financial performance. Financial performance. Then I need to know about how I am, where I am. This is how I am performing. Where I am, that I will understand with the help of financial position, and where I should be. That is progress. Financial progress. Right. So all this helps you to make better decision related to the business. And this also helps you to understand the profitability of the business. Profitability of the business, operational efficiency, how you are working, operational efficiency, right? Then what is your long term and short term solvency, right? And the growth potentials. Growth potentials. See, this financial performance I will understand by analyzing the income statement. It is nothing but our profit and loss account. Income statement. How I will understand the financial progress or position of the company? With the help of balance sheet. Balance sheet. And progress you will understand by comparing these two statements and cash flow statement. Cash flow statement, CFS, that is changes in your accounts, changes in equity. Now, what are the components of your financial statement? See, mainly there are two components under financial statement: income statement, balance sheet, and this helps you to understand that statement of changes in your financial position. So, with the help of this, you will understand your financial statement. These are called your financial statements, right? Now, how we are preparing these financial statements? Now, the first we are preparing the income statement. This income statement is also called as profit and loss account. As per the schedule, this forms the notes also. Notes also forms part of this income statement. And this income statement will be prepared as per the section 129 of the Companies Act 2013, and we have a provisions of the Companies Act and also the as per the Indian gap. And section 133 is applicable for all the accounting standard, and in accounting standard also it is mandatory to preparation and presentation of the financial statements. Then we are preparing the cash flow statement, and this will be prepared as per the clause 32. All the listed agreements made by SEBI, they will prepare this cash flow statement, and the circular issued on February 4th 2000. And this cash flow statement will be prepared as per the requirement of revised accounting standard 3. Then consolidated financial statement, it is applicable for all the listed company. It is mandatory, they need to prepare as per the SEBI circular issued on August 31st 2001. Here, this will be prepared. The consolidated financial statements are prepared as per the accordance with the Accounting Standard 21 and Accounting Standard 23. Section 134 demands for the board report, and that includes all the director reports, responsibility statements, and that includes this financial statements also in their annual accounts. Okay, as per the accounting standard applicable. Now, the framework. Framework means how you need to prepare this financial statement. The framework is issued by the IASB. IASB, that is Indian Accounting Standard Board. So they have issued cross sections like financial statement based on the interest of the users. You need to understand that your financial statements or reports are giving a relevant information to the investors or your stakeholders. Okay, what do you mean by relevant information? See, relevant information in accounting is, we need to know the information is giving both the confirmatory value, confirmatory value as well as the predictory value. Predictory value. When these two are there, then only it is called as the relevant information. Confirmatory value means the value which gives an confirmation through by recording with an evidence, right? That is confirmatory value. If I say in words, I have earned, made a huge profit of 20 lakh rupees, then nobody is going to believe. I need to show that in my financial statements. I need to record it by passing a transaction. So that confirmatory value will help me to predictory value, means predict the future. So that is called predictory value. And the information is useful to the true and fair view of accounts, transparency in the books of accounts. So when these informations are called, this will fulfill the framework of the financial statement. Now, as per Schedule 3, Part 1, form of balance sheet. So, Part 1, we are preparing the balance sheet. Part 2, we are preparing the statement of profit and loss account or income statement. The balance sheet we are divided into two parts. That is equity and liabilities, assets. Under equity and liabilities, we have totally four heads: shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Assets are divided into non-current assets and current assets. Here you are able to see the breakup of equity and liability. Equity and liability. Shareholders fund. Under this shareholders fund, we are showing share capitals, reserves and surplus, money received against the share warrants. Then share application money pending allotment. Non-current liabilities includes long-term borrowings, deferred tax liabilities, that is net we are considering, other long-term liabilities, long-term provisions. Current liabilities are short-term borrowing, trade payables, other current liabilities, short-term provisions. Now let us see the breakup for the assets. Assets are again subdivided into non-current assets, current assets. Non-current assets includes fixed assets, non-current investments, deferred tax assets, long-term loans and advances, other non-current assets. Current assets, the current investment, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. Okay, now this is the format for the income statement or profit and loss account. Please take pen and paper and note down with me. Okay. So try to understand the format, don't buy at it. And this is the easiest format if you understand the format. Okay. Here we have revenue from operation. How you are generating revenue? What do you mean by revenue? Whatever you have generated through sales, that is called revenue from operations. And revenue from operations, we are considering the net sales, that is after deducting the sales returns, right? So that is our revenue from operations. Other incomes means any interest income, if your company received, dividend income received, any net gain or loss on sale of investments, any non-operating incomes are considered under the other income. So this will be our total revenue. Total revenue. Revenue from operation ಅಂದ್ರೆ ಸೇಲ್ಸ್ ಇಂದ ನಾವು ಥ್ರೂ ಸೇಲ್ಸ್ ಏನೇನು ಜನರೇಟ್ ಮಾಡಿರ್ತೀರಿ ಅಂದ್ರೆ ಸೇಲ್ಸ್ ಫ್ರಮ್ ರೆವಿನ್ಯೂ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀರಿ. ಅದರ್ ಇನ್ಕಮ್ಸ್ ಅಂದ್ರೆ ಕಂಪನಿಗೆ ಬೇರೆ ಏನಾದ್ರು ಇನ್ಕಮ್ ಬಂದಿದೆ, ಕಂಪನಿ ಇನ್ವೆಸ್ಟ್ ಮಾಡಿ ಡಿವಿಡೆಂಟು, ಕಂಪನಿ ಇಂಟ್ರೆಸ್ಟ್ ರಿಸೀವ್ ಮಾಡಿದ್ರೆ, ಅಥವಾ ಏನಾದ್ರು ನೆಟ್ ಗೇನ್ ಸೇಲ್ ಆಫ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ಸ್ ಇಂದ ಬಂದಿರೋದನ್ನ ನಾವು ಅದರ್ ಇನ್ಕಮ್ಸ್ ಅಲ್ಲಿ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀರಿ. ಸೊ ಇದೆರಡು ನಮ್ ಟೋಟಲ್ ರೆವಿನ್ಯೂ ಇರುತ್ತೆ. ಇದು ನಮ್ ಟೋಟಲ್ ರೆವಿನ್ಯೂ. ಓಕೆ, whatever we have generated through sales. Now from this we are deducting all the expenses. Expenses, under expenses, ಕಾಸ್ಟ್ ಆಫ್ ಮೆಟೀರಿಯಲ್ ಕನ್ಸ್ಯೂಮ್ಡ್. ಕಾಸ್ಟ್ ಆಫ್ ಮೆಟೀರಿಯಲ್ ಕನ್ಸ್ಯೂಮ್ಡ್ ಅಂದ್ರೆ ಈಗ ನಾವು ಮ್ಯಾನುಫ್ಯಾಕ್ಚರಿಂಗ್ ಮಾಡುವಾಗ ಏನೇನೆಲ್ಲ ರಾ ಮೆಟೀರಿಯಲ್ಸ್ ನ ಪರ್ಚೇಸ್ ಮಾಡಿ ಯೂಸ್ ಮಾಡಿರ್ತೀರಿ ಅದನ್ನೆಲ್ಲ ನಾವು ಕನ್ಸ್ಯೂಮ್ಡ್ ಅಂತ ಕರಿತೀವಿ. ರಾ ಮೆಟೀರಿಯಲ್ ಕನ್ಸ್ಯೂಮ್ಡ್. So that will be considered our purchases, purchase of stock in trade, changes in inventory. The changes in inventory, we are opening stock minus closing stock. That we are taking any progress and stock in trade if it is there. Employee benefits. Employee benefit means all the benefits whatever we are giving to the employees. It includes salary, wages, all direct and indirect benefits whatever we are giving to the employees. Finance cost ಅಂದ್ರೆ interest expenses. ಡಿಬೆಂಚರ್ಸ್ಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಪೇ ಮಾಡಿದ್ದು, ಲೋನ್ಸ್ ತಗೊಂಡಿರೋದಕ್ಕೆ ಇಂಟ್ರೆಸ್ಟ್ ಪೇ ಮಾಡಿದ್ದು, ಅದೆಲ್ಲದನ್ನು ನಾವು ಫಿನಾನ್ಸ್ ಕಾಸ್ಟ್ ಅಲ್ಲಿ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀರಿ. ಡಿಪ್ರಿಸಿಯೇಷನ್ ಅಂಡ್ ಅಮ್ರಟೈಸೇಷನ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್, ಸೊ ದಿಸ್ ಆರ್ ಆಲ್ ಕಮಿಂಗ್ ಅಂಡರ್ ದಿ ಎಕ್ಸ್ಪೆನ್ಸಸ್. ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಅಲ್ಲಿ ಏನೇನ್ ಬರುತ್ತೆ? ಫಸ್ಟ್ ಪರ್ಚೇಸಸ್ ಬರುತ್ತೆ. ಪರ್ಚೇಸ್ ಮೆಟೀರಿಯಲ್ಸ್ ನಾವೇನ್ ಯೂಸ್ ಮಾಡಿರ್ತೀರಿ ಮ್ಯಾನುಫ್ಯಾಕ್ಚರಿಂಗ್ ಆಕ್ಟಿವಿಟೀಸ್ಗೆ, ಆ ಮೆಟೀರಿಯಲ್ಸ್, ಡೈರೆಕ್ಟ್ ಲೇಬರ್ ಎಲ್ಲಾದ್ರೂ ನಾವಿಲ್ಲಿ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀರಿ. ಚೇಂಜಸ್ ಇನ್ ಇನ್ವೆಂಟ್ರಿ, ಫಿನಿಶ್ಡ್ ಗುಡ್ಸ್. ಚೇಂಜಸ್ ಇನ್ ಇನ್ವೆಂಟ್ರಿ ಅಲ್ಲಿ ನಾವು ಓಪನಿಂಗ್ ಸ್ಟಾಕ್ ಮೈನಸ್ ಕ್ಲೋಸಿಂಗ್ ಸ್ಟಾಕ್ ಡಿಫರೆನ್ಸ್ ನ ತಗೋತೀರಿ. ಪ್ರೋಗ್ರೆಸ್ ಇನ್ ಸ್ಟಾಕ್ ಇನ್ ಟ್ರೇಡ್, ಎನಿ ಎಂಪ್ಲಾಯಿ ಬೆನಿಫಿಟ್ಸ್, ಎಂಪ್ಲಾಯೀಸ್ಗೆ ಏನೇನು ಬೆನಿಫಿಟ್ಸ್ ಕೊಡ್ತೀರಿ ಅದೆಲ್ಲದನ್ನು ನಾವು ಎಂಪ್ಲಾಯಿ ಬೆನಿಫಿಟ್ಸ್ ಅಲ್ಲಿ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀರಿ. ಫಿನಾನ್ಸ್ ಕಾಸ್ಟ್ ಅಲ್ಲಿ ಇಂಟರೆಸ್ಟ್ ನಾವೇನ್ ಪೇ ಮಾಡ್ತೀರಿ ಅದನ್ನ ಫಿನಾನ್ಸ್ ಕಾಸ್ಟ್ ಅಲ್ಲಿ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀರಿ. Depreciation and amortization. So this will be our total expenses. Now we will get profit before exceptional and extraordinary items and tax. So that is by from total revenue less total expenses, we will receive profit before exceptional and extraordinary items before adjustments anta. Now, any exceptional items is there that will be considered. Then profit before extraordinary items and tax will be calculated. Then extraordinary items, if it is there, that we are considering, then profit before tax we will get. Tax expenses will consider the current tax, whatever the tax we have paid, and deferred tax, whatever we are going to pay, that is deferred tax also we are considering. Then we'll receive profit for the year. Okay. Any profit or loss from discontinued businesses there, that also will be considered. Then we'll get total expenses on discontinued operation is there, means that will be deducted. Then we'll get profit from discontinuing operations. Profit or loss for the period by adding the profit and after deducting the expenses, whatever profit we have received, no, that. Then any earnings per equity is there, the basic and diluted will be considered. Okay. This is about the income statement or statement of profit and loss account. Here, whatever you are earlier preparing, like from your profit and loss account, there also same, you are taking all the incomes first, then you are deducting all the expenses, appropriations, whatever appropriations means commitments. Now profit is available for you. So what always profit, the business says recognize the expenses first anta ಅಲ್ವಾ. ರೆಕಗ್ನೈಸ್ ದಿ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಫಸ್ಟ್ ಅಂದ್ರೆ ಮುಂದಕ್ಕೆ ಏನೇನ್ ಖರ್ಚು ಬರುತ್ತೆ ಅದನ್ನ ನಾವು ಮೊದಲೇನೆ ಗುರ್ತು ಮಾಡಿ ಇಟ್ಕೊಬೇಕು. ಅಂದ್ರೆ ಅದಕ್ಕೆ ಏನ್ ಅಮೌಂಟ್ ಇಡ್ಬೇಕೋ ಅದನ್ನ ನಾವು ಎತ್ತಿಡ್ಬೇಕು. ಯಾವಾಗ ನಾವು ಎಕ್ಸ್ಪೆನ್ಸಸ್ ನ ಮ್ಯಾನೇಜ್ಮೆಂಟ್ ಮಾಡೋದು ಕಲಿತಿರೋ ಅವಾಗ ಆಟೋಮೆಟಿಕ್ ಆಗಿ ಇನ್ಕಮ್ ಇನ್ಕ್ರೀಸ್ ಆಗುತ್ತೆ. ಅದಕ್ಕೇನೆ ನಾವು ಎಕ್ಸ್ಪೆನ್ಸಸ್ ನ ಫಸ್ಟ್ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀವಿ. ಇನ್ಕಮ್ ನಮಗೆ ಬರೋವರೆಗೂ ನಾವು ಕನ್ಸಿಡರ್ ಮಾಡಲ್ಲ. ಬಟ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಬಿಫೋರ್ ಓನ್ಲಿ ವಿ ವಿಲ್ ಕನ್ಸಿಡರ್. ದಟ್ ಇಸ್ ವೈ ವಿ ವಿಲ್ ಕೀಪ್ ಆಲ್ ದ ಪ್ರಾವಿಷನ್ಸ್. ರೈಟ್. ಟ್ರಾನ್ಸ್ಪೋರ್ಟ್ ರಿಸರ್ವ್ ಮಾಡ್ತೀರಿ, ಪ್ರಾವಿಷನ್ ಫಾರ್ ಟ್ಯಾಕ್ಸ್ ಮಾಡ್ತೀರಿ, ಪ್ರಾವಿಷನ್ ಫಾರ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಮಾಡ್ತೀರಿ. ರೈಟ್. ಸೊ ಆಲ್ ದ ಪ್ರಾವಿಷನ್ಸ್ ವಿ ಆರ್ ಕೀಪಿಂಗ್. That is called our appropriations. Here also, after deducting whatever profit is available, from that profit, all the appropriations we are doing, then we will consider the remaining profit for the year. Okay. Now let us see the format for the balance sheet. Understand the format, and if you know thoroughly how to write the balance sheet, then you will get 100% score marks on your question also. Right. Here you can see, first we are writing equity and liability. Equity and liability. So first we will see the equity part. Equity andreno, that includes your capital also and whatever you have raised fund through by issuing the shares also. So that is why it is called the shareholders fund. Shareholders fund. First we are writing share capital. Then reserves and surplus. If any share you received against share warrant, these three are coming under the shareholders fund. Then share application money pending for allotment. You are not yet allotted, so it is pending. Then non-current liability, long-term borrowing, deferred tax liability, net. Other long-term liabilities, any liabilities is there, any long-term provisions is there, that also will be considered. So this is about non-current liability, all long terms. Okay. Then current liabilities. Here all short term you are considering. Short term borrowing, trade payable, other current liabilities, short term provisions. See, when you can take this by repayment, how you will repay? Whichever is small, first you are going to repay that. So that is why it is current liability. Okay, within a short period of time. You will take long duration to repay these amounts. That is why it is non-current liability. And after paying all these two, you are giving to shareholders. Shareholders fund at the end. So end is coming first. The second one, in a reverse order you need to write. Okay. Now, assets. Assets, first you are recording all non-current assets. That is fixed asset. Fixed asset includes tangible also, intangible also, capital, work in progress, intangible assets under development, non-current investments, deferred tax asset, net, long-term loans and advances, other non-current assets. Okay. Then current assets. Current assets is current investment, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. So this is about the balance sheet. Right. Now note down the format first and try to read and recall the format. Okay, whenever there is no entry for the particular items also, still you write till you are understanding, till you are perfect with the format, write the format first. Okay, now let us understand the income and the balance sheet with the help of the question more. The question is, from the following trial balance of Radha Company Limited, prepare a financial statement for the year ending 31st March 2023. So here they are given all the particulars, debit amount and credit amount. Sale of goods, this is revenue, 5,50,000. Office rent, 50,000. Opening inventory, 35,000. Purchase of goods, 1,70,000. Furniture, 1,85,000. Trade payables, 85,000. Plant and machinery, 1 lakh. Trade receivables, 1,60,000. Equity share capital, 40,000 shares of rupees 10 each, that is 4 lakh. 10% debentures, 1 lakh. Interest on debenture, 10,000. Fixed deposit for 6 months term, 70,000. Staff welfare expenses, 12,000. Surplus, opening balance, 10,000. Cash, 63,000. Building, 90,000. Rates and taxes, 25,000. Then salary, 55,000. Goodwill, 1,25,000. General reserve, 5,000. So total of the trial balance is 11,50,000 here. Now first we'll just mark under which account we need to record each item. Now sale of goods. Sale of goods ಅಂದ್ರೇನು ರೆವಿನ್ಯೂ. ಸೊ ರೆವಿನ್ಯೂ ನಾವೆಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀರಿ, ಇನ್ಕಮ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಅಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀರಿ. ಆಫೀಸ್ ರೆಂಟ್. Office rent is expenses. Under other expenses we are recording income statement. Opening inventory, we are comparing with the closing inventory, we are recording in a income statement. And please remember, whatever given in the trial balance you are treating once only. Whatever given in the adjustment, it should be treated twice. It should be treated twice. ಎರಡು ಸರಿ ಟ್ರೀಟ್ ಮಾಡಬೇಕು. ಒಂದು ಇನ್ಕಮ್ ಸ್ಟೇಟ್ ಅಲ್ಲಿ ತೋರಿಸ್ತೀರಾ, ಇನ್ನೊಂದು ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಅಲ್ಲಿ ಶೋ ಮಾಡ್ತೀರಾ. Purchase of goods. So again this is an income statement ಅಲ್ಲಿ expenses ಬರುತ್ತೆ. Furniture, it is an asset, it will be showed under the balance sheet under asset. Trade payables, that is bills payable. Here one more is there, whatever you have recorded on the credit side, no, that you will record under liability side. Whatever you have recorded under debit side, no, that you will record under the asset side. And debit side expenses you will record, credit side whatever it is there you are recording under income side. Okay, trade payable is liability, balance sheet liabilities you are showing. Plant and machinery, asset it is. Trade receivables, that is nothing but bills receivable, again it is an asset under the balance sheet, current asset it is. Equity share capitals, here you can see liability, right, under shareholders fund. 10% debentures is a long term fund, right, so debentures under liability. Interest on debentures, this we are showing under the finance cost under income statement. Fixed deposit 6 months term, the clearly they have mentioned 6 months, so this is an current asset under balance sheet. Staff welfare expenses related to staff, whatever expenses are coming, that we are recording under the employee benefits under income statement. Surplus here it is given. Surplus andre eno? So they have a excess of profit. So this is profit. Whenever it is given credit side, it's a profit. If it is given under debit side, then it is deficit. Okay, so for calculation of the reserves and surplus, whatever we need to record, then cash 63,000. Cash is we are recording under balance sheet, building assets, rate and taxes, under other expenses, income statement, salary, employee benefits, under income statement, goodwill is an asset, then general reserve liability. Right? We have an adjustments. Closing inventories rupees 45,000. Create a provision for taxation at 30%. Transfer to general reserve rupees 5,000. Director proposed a dividend of rupees 10%. 10%. Provide depreciation on plant and machinery at 10% and building at 5%. Right. Now let us solve this question. While solving the question, you need to prepare notes on account. It is compulsory. It's mandatory. So if you are doing any professional courses, you will have a marks for the your notes also. Notes also will be a part of your answer. Without notes, if you solve also, it won't be considered. So that is why you need to have a notes on your accounts. First, we will prepare income statement. For income statement, notes on account starts from note 7. 1 to 6 we are recording under balance sheet. From 7 we are recording under income statement. So here for notes on account. Notes on account for income statement. Income statement. Here there is no fixed number for the statement. Based on the adjustments, number will be increased. Right. So here we don't have any sales written. Sale of goods. So directly the revenue is given. So no need to calculate, any calculations is not there. And other income also there is no calculations. But for the employee benefits, we have an adjustments. 2-3 items we have. So let us record that. Note 7. Employee, or you can take 1, 2, 3 also, not an issue. Employee, but while solving the question, no, with in front of the particular item, you need to mention the note number also. Benefit expenses. Employee benefit expenses. So what are the employee benefits we have? We have salary. Salary is ಕೊಟ್ಟಿದ್ದಾರೆ. Salary ಎಷ್ಟು 55,000 ಅಲ್ವಾ? 55,000. ಇದರ ಜೊತೆಗೆ ಸ್ಟಾಫ್ ವೆಲ್ಫೇರ್, ಸ್ಯಾಲರಿ ವೆಲ್ಫೇರ್ ಫಂಡ್ ಕೊಟ್ಟಿದ್ದಾರೆ. ವೆಲ್ಫೇರ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ 12,000. ಸ್ಟಾಫ್ ವೆಲ್ಫೇರ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್. Anything else? No. So we are recording only 2 items. Staff welfare is 12,000. Total is 55 plus 12, 67,000. Right. The next note is we have finance cost. Finance cost. Finance cost ಅಲ್ಲಿ interest ಇದೆ. Interest on debenture ಎಷ್ಟು? ಒಂದೇ ಇರೋದು. Interest on debentures 10,000 ಅಲ್ವಾ? Interest on debentures 10,000. Next is depreciation and amortization. Depreciation on assets. Then need details of depreciation. The percentage is given. So what is that? What is the percentage? Provide depreciation on plant and machinery at 10% and building at 5%. See, in case provision for depreciation is given and depreciation expenses is also given. So try to understand that the asset value is given after deducting the depreciation, that is net value of the asset. Whenever the provision of depreciation is provided, again you are not going to calculate depreciation for the asset. So for the current year, if provision for depreciation is provided, that means after deducting only we are providing depreciation, provision for depreciation. So that is why the value of the asset will be given net then. Okay. Here it is not given, so we are calculating depreciation. Depreciation on, provide depreciation on plant and machinery 10%. So what is the value of plant and machinery? It is 1 lakh. Depreciation on plant and machinery. Plant and machinery on 1 lakh is to 10%. On 1 lakh 10%. 1 lakh into 10% is 10,000. Right. Then next we have building. Building at 5%. Building. Building. What is the value of the building? It is 90,000 and the rate of depreciation is 5%. 9 5s are 45. So 4,500. What is your total depreciation? 14,500 is total depreciation. Then we have other expenses. Other expenses. So what are the other expenses we have? We have office rent. Office rent is other expenses. Office rent amount is 50,000. Then we have one more other expenses, that is rate and taxes. Rate and taxes is rate and taxes 25,000. Total expenses is 75,000. Do we have any other items? Under income statement, we have recorded, see, rate and taxes, salary, staff welfare, interest on debentures, then purchase of goods, opening inventory, we are recording directly sales also. So nothing else we have. Now let us prepare the income statement. Ratna Trading Company Limited statement of profit and loss account for the year ended 31st March 2023. Particulars, note number, amount. First we are recording what? Revenue from operations. Revenue from operations. Total sales. Here we don't have any adjustment for the sales. So whatever sales it is given, we are writing as it is. 5,50,000. 5,50,000. And we don't have any other incomes, but still we need to write other income. Income is nil. Now what is our total income? Total income. Consider this as A. The total income is 5,50,000. Now you are recording all the expenses. Under expenses, purchases, we have purchase of goods 1,70,000. 1,70,000. Then we have changes in inventory. Changes in inventory. Here opening stock minus closing stock. So what is our value of opening stock? That is 35,000 minus closing stock value is given in the adjustments, right? So that is closing inventory is 45,000. 45,000. 35,000 minus 45 is minus 10,000. Changes in inventory. Then we have employee benefits. For employee benefits, what is the number? Now, note number is 7. Note number is 767,000. Then we have finance cost. Finance cost. Note number is 8, 10,000. Then depreciation and amortization. Note number 9, 14,500. Other expenses, 75,000. Note number is 10, 75,000. Right. We have recorded all the items. Now the total expenses is, we'll consider this as B. So what is our total expenses? 1,70,000 minus 10,000 plus 67,000 plus 10,000 plus 14,500 plus 75,000. Right? That is 3,26,500. 3,26,500. Now, what is our profit before tax? Profit before tax, that is A minus B. A minus B. So, what is our minus 5,50,000 is 2,23,500. Now, tax expenses. Tax expenses. We don't have any deferred tax, only we have for the current tax. The current tax is given in the adjustment. Create a provision for tax at 30% on provision for tax 30%, right, on our current year profit, on 2,23,500 into 30%. 2,23,500 into 30% is 67,050. 67,050 is current tax. Now, profit after tax. We don't have any other adjustments, right? Profit for the year. From 2,23,000 minus 6750, 1,56,450. Here you need to find out what is your EPS also, earnings per share. So what is your earning per equity? Earning per equity. Earning per equity is profit for the year divided by number of equity shares. So profit for the year is 1,56,450 divided by what is our equity share, that is equity shares is 40,000 shares, right? 40,000 shares divided by 40,000. 3.91. 3.91. This is our EPS. Now, let us prepare the balance sheet, right? So, how we are preparing the balance sheet? First, we need to prepare notes on account, right? Notes on account. First note is share capital. Share capital. What is our equity share capital? Equity share capital 4 lakh. We don't have any adjustments. We are writing as it is 4 lakh. Now we have reserve and surplus. For this we have an adjustment. Reserves and surplus. Please focus here and understand what is the general reserve available. General reserve given in the trial balance. It is 5,000. 5,000. And in adjustment, they said to transfer this general reserve 5,000 again, right? So add transfer to general reserve 5,000. What is the total closing balance now? Closing balance of reserve and surplus is 10,000. And we have a surplus of opening balance, right? Surplus opening balance. What is the surplus opening balance? It is given surplus opening balance 10,000. The 10,000 we are considering. 10,000. Now add surplus from the profit and loss account. So what is the profit and loss account surplus we have received? After deducting all the taxes, it is 1,56,450. 1,56,450. Right. Now what is the amount available for appropriation? Amount available for appropriation. Total again ನಮ್ಮ ಹತ್ರ available ಇರೋ profit ಎಷ್ಟು 1,56,450 plus 10,000 plus 10,000. 10,000, yes, right? 10,000 opening balance surplus. So this closing balance we are not going to consider for the available appropriations. 1,66,450. 1,66,450. Now less appropriations. Less appropriations. Now we will understand. Appropriation is what appropriations we have. We need to propose a dividend to the director. Proposed dividend at 10%. Proposed dividend. Proposed dividend on equity shares, right? Equity share capital 4 lakh. 10% we are proposing. Between the annual general meeting, the dividend are proposed by the directors. That is 4 lakh into 10%. So it is 40,000. Okay. On this, we need to deduct the tax also. Corporate dividend tax. Corporate dividend tax will be calculated at 16.995%. If any percentage is given, that we are considering. Otherwise, as per CBDT, we will consider 16.995% of 40,000. How much it will be on 40,000? 40,000 into 16.995% andre 6,798 tax amount, right? So amount transfer to general reserve. Amount transfer to general reserve is 5,000. So what is your closing balance of profit? From 1,66,450 plus 40,000, sorry, minus 40,000 it is. 1,66,450 minus 40,000 minus 6,798 minus 5,000. It is 1,14,652. 1,14,652. This is our A total. This is our B total. Now, total reserve and surplus. Reserve and surplus, that is A plus B. A plus B. 1,14,650 plus 10,000. 1,24,652 you are showing in your balance sheet under reserves and surplus. So what we have done, we have taken general reserve, whatever given in the trial balance, and whatever the amount transferred, that will be our closing balance for the year, 10,000. And we have calculated, so what is the present profit available after appropriations, that is amount available for appropriation was the opening balance of surplus. Previous year profit and loss account opening balance is 10,000, and from current year we got a profit of 1,56,450. The total appropriation available profit is 1,66,450. From this we have proposed a dividend at 10%, 40,000, and we paid a tax on this dividend 6,798, and amount transferred to general reserve 5,000, because already we have showed this amount here, so that is why here we are deducting. Okay, now 1,14,652 we have added it back. So what is the amount we are going to show in reserves and surplus? 1,24,652 we are showing. Now long term borrowing. Long term borrowing, only one item we have, that is debentures, right? Long term borrowing. Long term borrowings. 10% debentures. Debentures is 1 lakh. There is no other any borrowings, long term borrowings. The next we have short term borrowings or short term provisions. Short term provisions. Short term provisions, we have proposed dividend. Dividend. Proposed dividend is 40,000. Already we have calculated, right? 40,000. Then we have paid corporate dividend tax at 16.995%. It is 6,798. Then we have a provision for tax. Provision for tax, that is 67,050. We have calculated, right? 67,050. See, twice we are showing. Okay, once we showed in the income statement, there is profit and loss account, again we are showing in the balance sheet, and this also we are showed in the old format of our profit and loss account. While preparing the reserve we have considered, right? Now we are considering in the balance sheet. So what is the total of these three? Total is 40,000 plus 6,798 plus 67,050. So total is 1,13,848. Right? 848. Then we have fixed asset. Fixed asset, this is number 4. 5 is fixed assets. Fixed assets we have. Here we can prepare with this format. Here particulars, then gross block, depreciation, net block. Particulars, gross block, depreciation, then net block. Okay. So particulars we have machinery, right? Plant and machinery. For machinery, the value of the machinery is 1 lakh. Plant and machinery is 1 lakh. Depreciation is 10,000. 1 lakh minus 10,000, net block is 90,000. Then furnitures. Furniture is 1,85,000. There's no depreciation on the furniture. So we are taking as it is 1,85,000. Then we have building. For building, gross block is 90,000. 4,500 is depreciation and 85,500 is net block. Now total, what is the total of gross block? 1 lakh plus 1 lakh 85, 2 lakh 85 plus 90,000 is 3 lakh 75,000. And total depreciation is 14,500, 3 lakh 60,500. We have one intangible asset also, that is goodwill. Goodwill is 1,25,000 and there is no depreciation or amortization. 1,25,000. Right, for goodwill. Now cash and cash equivalents. The last, let us write here only the last cash and cash equivalents. What is our fixed deposit? Short term fixed deposit, it is 70,000, 6 months. 70,000. Cash 63,000. So total is, it is 1,33,000. Right? 1,33,000 is cash. Now let us prepare balance sheet. So here we have a format, Ratna Trading Company Limited balance sheet as at March 31st, 2023. Particulars, note number, amount. Here we have equity and liability. Under equity and liability, the first item is we are recording the shareholders fund, share capital. Share capital note number is 1 and we don't have any adjustment, so 4 lakh we are recording. Then we have B, that is reserve and surplus. Reserves and surplus, all types of reserve, any reserves, other reserves also given, that is also you are recording or showing under this reserves and surplus only. So that is 1,24,652. Note number 2, 1,24,652 we are recording. The next item we have, that is non-current liability. Non-current liabilities. Right. Under non-current liabilities we have long-term borrowing. Long-term borrowings. So long-term borrowings is schedule number 3 we have. Right. Long-term borrowing is 1 lakh. Long-term borrowing is 1 lakh 3. Then we have short term provision. Whenever it is short term, it is coming under current liabilities. So next heading is current liabilities. Current liabilities. Under this we are recording short term borrowing. Short term borrowing is 4. What is the amount? It's 1,13,000. 1,13,848. There is no trade payable. Trade payables. Oh, it is short term borrowing. Provisions, under provisions you need to write this. Trade payables. We don't have any trade payables. This is provision. Okay. Provision. Then short term borrowing is also nil. Other current liabilities. Other current liabilities also nil. Now what is the total of equity and liability? Total 4 lakh plus 1,24,652 plus 1 lakh plus 1,13,848. 7 lakh 38. Any other items we left? Trade payables, check it out. We have trade payables, but there is no adjustments. So it is 85,000. It is 85,000 plus 85,000. Total is 8,23,500. 8,23,500. Now what about our assets? Assets. Under assets, first we are recording non-current asset. Non-current assets. Under non-current assets we have all tangible assets. Tangible assets. We have prepared a notes on accounts on tangible assets, right? So that is 3,60,500. Machinery, furniture, building, all these are coming under the tangible asset. So it is 3,60,500. Then we have intangible asset. Intangible asset is goodwill. It is 1,25,000. Then the second item is current assets. Under current assets we have investments. Investments is given. No, it is nil. Then we have inventories. But inventories we have, right? Closing inventory 45,000. Then we have trade receivables. Trade receivables. Trade receivables is given. Trade receivables is 1,60,000. 1,60,000. Last is cash. Cash we have calculated. That is 1,33,000. 1,33,000. For all the non-current asset, we have note number 5. For cash, we have note number 6. Now, what is the total of asset? Total is 3,60,500 plus 1,25,000 plus 45,000 plus 1,60,000. 1,33,000. 8,23,500. right? We have recorded all the assets and liabilities. First, we have prepared income statement. For that, we have prepared the notes on accounts. I hope you all understood. Thank you for watching. If you are not yet subscribed, kindly subscribe the channel. Press bell icon to receive updates. Have a great day.